Welcome back, everybody. This section is going to be on using volume and also on stock alerts. A stock alert is a way you're going to create a notification so that you can be notified if a stock crosses a certain level. So first, let's look at stock alerts. You could download apps from your smartphone so that you're going to be notified if a stock crosses a certain price level. You also can use some websites such as customstockalerts.com, Signals.com, and your broker may even offer this for free. I personally like to use a smartphone app called Real-Time Stocks Tracker, and I get an iPhone notification when a stock has risen above a certain price level. So, I could have my phone away from me, and then when I open my phone, I'll see a little notification, Apple or Netflix, whatever stock, let's say, has crossed above price level, whatever. Now, I'm not going to buy it just because I get this notification, but it allows me to then look at the chart and see the action of the stock that day. You have a lot of options that you could use for these alerts. You have websites that you could use. A lot of brokers will let you do this. I know MarketSmith will send you an email. So you could look at your broker and see if they have it. And I like to personally use my smartphone because if you use your email, then you got to check your email, and sometimes you're busy with other things. I like the smartphone app because it's right there on your notification screen, on your home screen when you go look at the time on your phone. Once again, once you get the alert, I'm not going to just buy the stock outright. I'm going to look at the chart, and I also like to look at a volume estimating spreadsheet I created because I want to see an estimate for how the volume's looking in the stock. And remember, we like to buy stocks after 3 p.m. because these are just estimates that we're doing. We don't know the real action of the stock for the day until later in the day. And we want to buy as close to 4 p.m. as possible. 4 p.m. is the closing time. So I like to do my buying after 3 p.m. When we talk about volume, we want to see tight, quiet price action with low volume prior to the breakout. We want to see an increase in volume on the day of the breakout. I like to see volume above average on the breakout. A lot of slim traders, they want to see volume above 40% above average. For me, as long as it's average, it's buyable. But if you want even more conviction, then you'd say 40% above average. When a stock breaks out, volume is telling us the conviction behind the move. A low volume breakout can work, but we like to see that increased volume because it's putting the odds in our favor. It's showing the conviction. I like to think of volume as fuel. When a rocket's taking off, it needs a lot of fuel to overcome the Earth's resistance. Same thing with the stock. It needs the fuel, it needs the volume, it needs the conviction to overtake a price level, a resistance level, before it heads higher. I will use the volume estimating Excel I created to estimate the volume earlier in the day, and I'm not going to buy the stock yet. But it gives me a sense of what's going on. If I get a stock alert and I put the volume into the Excel and the volume is way, way, way low, I'm going to say, well, this is a stock I'm probably not going to have to look at later on in the day. If I put the volume in the Excel and the volume is estimated to be very, very big, then what I'm going to do is I'm going to say to myself, you know what, I'm going to make a note that I'm going to watch this stock again at 3 o'clock, 3:30, etc. If the stock has low volume at 3 o'clock and it's above the breakout point, it's not a trade that I want to take. You could still take the trade. There are traders that I know who they don't use volume. They go purely by price. And their system will be if the stock is above a certain point, they buy it, at closing time. I personally like to use volume. So for me, if the stock's above the resistance level, if the stock's breaking out on low volume, I don't really want to take a buy into it. But that's just me because I want to have the conviction. I want to have the odds in it. False breakouts. So let's look at ServiceNow here. You see on this black candle here on this day, the breakout level was around 280. Intraday it rose up above 280, and later on in the day here it was closing way below 280. So this is why we don't make trades early on. When I first started trading, I'd put a buy order. I'd probably put a buy stop with my broker, and I'd buy it on days like this, and then it'd come down, and then the next day it'd fall down like this. And I'd say, well, what happened here? Well, look at the low volume on that breakout day, and also it was an early day move. I like to buy stocks later on in the day so I could see the volume and I also could see the price action for the entire day. So when you wait until 3 o'clock to buy stocks, you avoid a lot of situations like this. I lost thousands of dollars doing stupid things like this because I would just put a buy alert in at 280 and I'm buying the thing with my stop, my buy stop it automatically at 280, and then by 10 o'clock I've already lost 4% or so. So don't be silly like me. Ring, same thing here. You see the black candle here, it goes way above 25. Some people will think, oh, I'm buying it, it's looking great. They're buying it like 126 or so. Before they know it, by the end of the day, it's closing underneath the pivot point, 125, and the next few days heads lower. So when you wait till 3 p.m., it allows you to assess the volume as well. So that's why we wait until 3 p.m. We want to see the volume, and we want to see if it can hold above that area, that breakout area. Lulu. Now here's a chart that I actually got through multiple times during the day. So here's at 9:54 a.m. You see Lulu's breaking out here, right above the 179, 180 area, really about to head higher. Nice volume. So look at this. Average volume is 2 million. It's already at 1.67 million at 9:54. So the volume is on track to be pretty good. It's near the breakout range, so that's good. But we have to have discipline. We have to wait till 3 p.m. Let's fast forward a little bit. By 3:34, Lulu, it's got the volume, but it's fallen from 173. It opened around 182, 181.99. It went up to 182.89. Here's the little rally here. And now you see it's at 173.32. So it's still up 1.42% for the day, but it's below this breakout area, this 180 breakout range. So what happened to me with Lulu is I set an alert for the 180 range, and I got my alert very early in the morning, and I saw the volume was coming in. I said, that's good. I said, let me wait. And I saw by 3:34 here, it's really falling down. And now it's below the breakout point of 180. So this is not a trade you're going to take. You're going to wait for it now to get back above this 180 range. So I like to be more conservative. Like I said, when I first started trading, I would just buy stuff like this right away. I'd be like 935, I'd be buying this stuff at like 182, and then before I know it, I'm at a loss at the end of the day. So I learned through my mistakes, through losing thousands of dollars, not to do things like this, to wait till 3 p.m., to assess the volume, to make sure a stock is closing above a breakout point. So these are little nuances, little tips you learn along the way to get you out of these trades that cost you so much money along the way. Now we're going to talk about the volume estimation Excel. So here's what you're going to do. You're going to have this Excel included in the course, and you can download it in this section. It's a downloadable file. And this is just an Excel I created. And what you're going to do is you're going to go to stockcharts.com and you're going to look for the 50-day average volume, and you're going to put that number in here. And then you're going to look for the average volume, and you're going to go to minutes past. So what you do for minutes past is you go for the time that it is, and then you put the adjacent number in there. So if it was 10 o'clock, you put 30 in here. If it was 1:30, you put 240 in there. Okay, so what you do is you go for the time, and you look at the time, and then you look at the minutes past, and then you put that number in there. And then if it's like, 11:05, you just say 95 or whatever. And then what you're going to see, this end minimum, that's the type of volume you want to see at the end of the day if you want 40% above average volume. Now, it doesn't have to necessarily be 40% above volume, but that's what the O'Neill people say. For me personally, it's got to be above this one. The estimate has to be above the 50-day volume, but if you want really, really a lot of volume, then you want to say the end minimum. So for me personally, as long as it's going to be above the 50-day volume, that's okay. But if you want extra conviction, you're going to look for the end minimum number to be much higher than the 50-day volume. So let's look over here. You see here, when we look at a stock like Lulu, here's the current volume here. Here's the current volume, and here's the 50-day volume. So with Lulu here, we would put those numbers. Now you could just look at the chart and you could see, wow, this is really, a massive volume here. But if you still want to do, you put the current volume in here, and then you put the 50-day minimum here. It's easier to see earlier in the morning. See, earlier in the morning, you see 1.67 million, and then you see 2.02 million here, and then you see the time up here. So you would put that in the Excel to see how it comes together. So let's open the Excel now, and we'll see how it all comes together. Okay, everybody, so we're back now, and we're looking at the Excel. So let's say I had a stock, and the stock had a 50-day average volume of 24.78 million shares traded a day. and the volume now was 5 million. Okay, and what time was it? Let's say it was 10:15, so I put the 45 in there. We would want this stock to have a minimum volume of 34.69 minimum to have 40% above the 50-day average volume. And this green number here is telling us the stock is projected to have 43.33 million average volume. Now, like I said earlier, me personally, for a breakout, I just wanted to be above this number here, the 50-day average volume. But I made this extra part, this end of day minimum and project volume. If people, they want to be extra conservative and they want to see an increase of volume of 40% above the 50-day average, then they would want to see this projected number to be above this one here. So this number down here, this projected number, for me personally, it's got to be above this number, the 50-day average volume. And for people who are more conservative, they're going to want it to be above this number. So let's say the same stock. Let's say it had 5 million volume shared, 5 million volume coming in during the day, and it was at 1 o'clock. We put 210 in there. And now we see this stock, it's only projected to have 9.2 million volume. So you see this is way below the 24 here. Okay, so we would avoid that trade. Let's say there was a stock and it had an average volume of 15 million shares traded a day, and the current volume, let's say, was at 3. Okay, and it was at 10 o'clock. I'd put 30 in here, 10 o'clock, 30. And I say, wow, this stock is projected to have 39 million shares traded today. This is far above the average volume of 15. So if I was looking at this stock and this was at 10 a.m., what I would say to myself is, I'm not going to buy it now, but I'm going to write down to take a look at this stock later on in the day, 3 o'clock, 3:30, 3:45, etc. I'm going to look at this chart, and I'm going to see, is this a stock that's still above its resistance level? Has the volume continued to come in? If so, if it's finishing strong, then I would take a position in it. If it's something where I saw something like this, like a stock had 3 million shares traded, and it was at 2 o'clock, and I put 270 in, right? You see this stock is projected to have very low volume. So I'm going to say I'm going to pass on that. This is not a stock I'm going to watch today. I want more volume coming in. Once again, to clarify once more, for me personally, I want the volume to be above the 50-day average volume. If you want even more conviction, if you want to be very conservative, then you're going to want this projected number here to be above this number here, the end of the day minimum. So it's a matter of personal preference for you, what you would like to do. I wanted to include a quick section on brokers. I use Interactive Brokers, and they have time orders. What this allows you to do is it allows you to set up to buy a certain amount of shares after a particular time in the day. Thinkorswim has market on close orders where you could set it up to buy a stock at the close, and other brokers have other different types of complex orders, but those are the only two brokers I use. I personally do not really have to use these very often. Very rarely do I use this with Interactive Brokers. Once in a blue moon I'll do it, but I'm lucky. I'm lucky in the sense that I'm in a situation where I could watch the stock market from 3 to 4 p.m. I don't know what your particular scheduling is. I highly suggest being able to watch the stock market from 3 to 4 p.m. That's the ideal scenario. You can also investigate Interactive Brokers, their time orders, or Thinkorswim's market on close orders if it helps you with your particular schedule. In other words, let's say you were somebody who could watch the stock market at 2 o'clock, but you can't watch it at 4 o'clock. This may be something that could benefit you. I personally would not fully recommend this. It's much better to be able to watch the stock market from 3 to 4 p.m., but I wanted to include this just in case. So if you have Interactive Brokers, what you do is you go to the start time here, and this is under the Classic. They have Mosaic and Classic under Trader Workstation. You go to the start time here, and then you just enter the time here. So for here, I could put July 18th and, whatever time I want to put in here. So like I said, ideally, you really want to be able to watch the stock at 3 o'clock, 3:30, 4 o'clock, etc. I'm lucky I'm able to do that. Other people are less fortunate. So you have to think about what works for you, what works for your schedule. You can also contact your broker and see what they could do. With Interactive Brokers, they have all sorts of crazy orders you could do. You could do, if this happens and that happens and that happens, if these conditions are all met, put the order in at this time. Thinkorswim has a lot of orders. So investigate and see what you can do to make it work for your schedule, make it work for your trading style. But like I said, ideally you want to be able to watch the stock from 3 o'clock to 4 o'clock, especially. That's the most important hour of trading, is the last hour. That's where you see a lot of the conviction. That's where you see the volume coming into the stocks. So I hope that section was helpful for everybody. I hope it clarified how to use volume. And remember, you can download the Excel. It's included, the volume estimation Excel. So you can download that if that helps you estimate volume during the day and helps you see if a stock is worthy of being watched later on in the day and if the volume is coming in.